Food prices are up. A fund manager discusses worst stock crash since 1929 and tech company layoffs. Hi, it's Edward, back with another video. Please take a moment to click the thumbs up button below and consider subscribing to the channel. Please also share this video with your friends. Thank you for your support. Today, I read several financial news articles. I've included links to the articles in the description below. I encourage you to read the articles to support the authors and news sources. As a private American citizen, I'd like to report and share my transformative thoughts through commentary regarding small sections of these articles that are of public interest. Today, I read an article on Yahoo Finance put out by Go Banking Rates and written by Yael Buziati Kennedy, titled, "Food Prices Haven't Eaten Up So Much of Your Money in 30 Years. What to Expect This Year." According to the author, the latest consumer price index data released March 12th showed that while the food index remained unchanged in February, the food away from home index rose 0.1%. Still, prices for food at home are up 2.2% for the year, and in terms of food away from home, the index is up 4.5% for the year. Well, my friends, I hate to hear about this. In my opinion, Americans are already struggling with their personal finances. I know food companies are in business to make money, but I wish they could give up a small amount of those profits to keep food costs down for consumers. I have read articles in the past talking about people going into credit card debt to buy groceries for their families. I have also read articles about people using buy now, pay later loans to buy groceries. I once read an article about someone using buy now, pay later loans to pay for fast food at the drive-thru. To me, it is frustrating to read about all of this happening here in America when we are supposed to be a world superpower and a country where a lot of people dream of living. The author of this article went on to reference the U.S. Department of Agriculture. The USDA indicated it expects overall food price inflation to slightly decelerate in 2024. In 2024, all food prices are predicted to increase 2.9%, while food away from home prices are predicted to increase 5%, according to its Food Price 2024 outlook. In my opinion, these percentages may seem low, but many American families already have their budgets stretched to the max. Some can't afford any additional price increase. I have to wonder how people are going to compensate. Are some people going to take on a second job? Are some Americans going to move in with family members to cut costs? Will some have to forego streaming services or vacations? Will some individuals need to carpool to work as a way of cutting costs so they can afford their groceries? Perhaps some will need to change their diets dramatically because they will only be able to afford less expensive food items. To my point, one of the commenters beneath this article said, "I'm thinking people are eating a lot of stuff they never even considered 5 years ago. Store brands, looking for sales and using coupons, more produce, cuts of meat, cutting a roast into several meals, buying whole chicken and using up every scrap." I think this commenter may be spot on. However bad things are now, imagine what could happen if the stock market crashed. Not a correction, but a full-blown crash. I read an article on Yahoo Finance put out by Business Insider and written by Layla Maiden, titled, "Black Swan Fund Manager Mark Spitzenagel expects the stock market to rally further before we hit the worst crash since 1929. He explains how investors should think about their portfolios to survive the next few years. The author of this article referenced the founder and CIO of Universa Investments. According to the author, his fund made headlines for returning 4,144% amid the 2020 stock market crash, an example of a so-called black swan event. The author went on to quote him as saying, "Right now, we are in the late stages of a boom that's approaching its bust." He also said, "I continue to expect a blow-off, and then I expect a crash that will be the worst crash since 1929. And my simple reasoning for that is that we are witnessing the bursting of the greatest credit bubble in human history, and crashes are direct consequences of the bursting of credit bubbles." Well, my friends, some people regard Mark Spitzenagel as a bear. Some people also believe the stock market will continue full steam ahead. Many are placing their bets on the Magnificent Seven and believe the hype around artificial intelligence, and they believe it will continue to lead markets higher. And maybe they are right. I lived through the dot-com era, and many stocks defied logic for a very long time. Eventually, there was an epic crash. Many companies didn't survive the carnage. Some emerged from the ashes and continued to flourish for years to come, and are still with us today. No one knows what is going to happen with the stock market. Conventional wisdom cautions against timing the market. There are a lot of bears who are frequently in the news warning of a stock market crash. Some have lost out on some amazing gains in recent years. If we do experience the worst crash since 1929, imagine how that would impact life as we know it. Imagine what the unemployment rate might be. Imagine what might happen to real estate. Here are my thoughts, and keep in mind, I'm just some guy on YouTube, so what do I know? Unlike in 1929, we now have circuit breakers in place that will trigger limit down and halt trading. We also have a Fed who seems to come to the rescue whenever there is anything that could potentially trigger a panic. Their go-to playbook has been money printing, bailouts, and painting a rosy narrative in the media. Even if they failed at keeping the market propped up, I don't think we would see soup lines like in the old black and white photos from the Great Depression. Just like during the pandemic, the government would likely distribute checks to all Americans so they can continue to buy their favorite tasty food at the grocery store. There may be new eviction or foreclosure moratoriums, and who knows what else. I read some of the comments beneath this article. One commenter said, "So, to be clear, the guys whose entire investment philosophy capitalizes on when the market pullbacks expects a pullback." I thought that was a good one. The next commenter said, "I've experienced several bubbles and severe pullbacks in my lifetime and have learned one thing specifically. The average person buys high due to FOMO and then sells low due to panic and gets annihilated. My advice is to not listen to the talking heads, as they have an agenda and it is not to help you. And have a well-diversified portfolio, setting stop-sell orders on growth stocks to protect your profits." Well, I have a friend who unfortunately panicked during the dot-com bust and sold near the bottom and got destroyed. He was close to retirement and ended up needing to work about another 15 years after that. Another commenter wrote, "Doom and gloom is a way for these guys to make money in the stock market. If everyone believes the market will crash, he can buy the stocks cheap after you sell." The last commenter said, "This guy has absolutely no idea what's going to happen, but that doesn't stop him from talking." What do you think about all this? Share your thoughts in the comment section below. I read an article on CNBC.com written by Alex Kohler titled, "Laid Off Techies Face Sense of Impending Doom with Job Cuts at Highest Since Dot-Com Crash." According to the author, since the start of the year, more than 50,000 workers have been laid off from over 200 tech companies, according to a tracking website, layoffs.fyi. It's a continuation of a predominant theme of 2023 when more than 260,000 workers across nearly 1,200 tech companies lost their jobs. The author went on to say, last month's job cut count was the highest of any February since 2009, when the financial crisis forced companies into cash preservation mode. In my opinion, many of the people who work in tech are often able to find another job quickly, especially if they have a strong work history and a skill set that is in demand. This is not the case for everyone, but a lot of people who get laid off don't stay unemployed for long. Understand, I'm not minimizing what is happening here. My heart goes out to people who have lost their jobs. I hope they're able to find new employment that is rewarding in short order. I hope their families are not impacted. Hopefully, all of these people have an emergency fund to rely on until they find a new job. Unfortunately, a lot of people, even high-paid employees, still live paycheck to paycheck and never set any money back for a rainy day. Losing your job is certainly a rainy day. Here is something that I want you to think about. Many tech stocks are on fire lately. If we are hearing about all of these layoffs during a time when tech stocks are doing well, what in the world might we be hearing about if and when we see a correction in NASDAQ stocks? Depending on the drop, some companies may lay off a lot of people to cut costs and keep their stocks propped up. Imagine how this could potentially impact some local real estate markets in areas where a lot of tech company employees live. Imagine how it could impact local businesses in those areas as well. Let's hope this does not come to fruition. I want the best for everyone. I just want you to think about what could happen and how that could be a rude awakening to some people who have grown far too comfortable during a period of cheap and easy money when some zombie tech companies have been able to survive. What do you think about all this? Share your thoughts in the comment section below. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. Check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.